Hello, everyone, and we'll let all of the people in and make them speakers. There we go, there we go. Let's give it a few minutes until everyone's joined.
Hello.
Hey, Sonny, how's your day been so far?
Great. Just coming from a podcast with Julian.
Yeah, I've heard. Looking forward to editing that one.
Oh, nice. And some good Bitcoin price action today.
Yeah, we can stack some cheap sats again.
That's true, yeah.
There we go, and I've seen the first couple speakers joining. Cool. Maybe if the speakers join, just do a quick mic check so we got everything sorted out there.
Hello? You guys hear me?
Yes, we can hear you perfectly.
Hey, this is Preston.
Hey, Preston, how are you doing?
Doing great. How about you guys?
Good. It's always a good day if we can speak about Bitcoin. So.
Hey, Preston, how are you?
Hey, guys.
Sorry, I was on the other line. Who said hi?
Many people said hi, but I'm Julian here from Switzerland. Nice to meet you, Preston. Thanks for the post
Julian.
today.
How are you doing?
I'm good, thanks. How familiar are you with Swiss time? I saw you were posting that like Swiss is the best time because of the watches, etc. Have you ever been to Switzerland?
I have not, and I want to come in the worst way. And Julian, you give me a reason to come there.
Okay, let's say if we hit 1 billion in trading volume this year, you will come, okay?
Oh yeah, I'm there. You don't even need to. You don't even need to make such metrics like that. I just want to come anyway.
Okay, cool. Let me know when you have time. I will always make time for you.
Will do.
All right, cool. As like always here in Switzerland, we're very punctual, and I think we have most of the cool experts on the panel. I would suggest that maybe everyone gives a quick hello and introduction, what he's basically doing in the Bitcoin world, and whether or not he thinks that we are already in the bull market. So maybe, Preston, if you just want to start, and then we give it into the round.
Yeah. So, I think that we're super exciting time. I think I'm most excited about just the sheer amount of supply suffocation that's happened over the last year and a half, 2 years. And I think that that's the thing that few are talking about. Most are just talking about the ETFs and like all the new money that's being plugged into the network to kind of take it to new levels. But I think the thing that's lost on most is just the sheer amount of coins that have been sucked out of the market. And I think the last bull run was heavily manipulated or toyed with. And I think that what it's actually done is just kind of reduced the amount of supply much more than it would have been if we would have gone through a natural market cycle. So um, I think that dynamic is an interesting setup. I would argue that in traditional markets right now, I think you have some interesting things playing out with respect to the treasuries, with the dollar, with oil, and some commodities. It's suggesting the inflation monster might be kind of rearing its head again. And if so, and if they can't keep it under control kind of going into the end of the year, um, I, don't, I don't know what that looks like, but I will say it's going to look very interesting and it's going to get really exciting. So, and a lot of those metrics that I'm talking about, whether it's the dollar, the treasury yield curve, or oil, I think you're just starting to see from like a momentum standpoint and from a price action standpoint, it's kind of butting its head up against uh, some resistance and some breakout areas that if it would kind of jump through those, it's going to get spicy like really fast. I'm curious if some of the other people on the panel would agree with that, but yeah.
Cool. I can hop in here. Thanks for having me, guys. Stoked as always to be a participant and get a front and center look at what's happening here. Riding the ups and downs with conviction is a whole lot of fun. I've been honestly, at least compared to my outlook last year, extremely surprised by how how bullish everything has been, and actually very much underestimated the fiscal dominance reality of where we are with the economy. And as long as they continue to issue debt at the pace that they have, paradoxically, just given who has the cash in the system, the high net worth individuals essentially, it's actually like paradoxically stimulative. And so yeah, I agree with Preston. The equity, the legacy markets are really exciting and interesting rather, because we see quite from a historical standpoint, quite a growing disconnect from equities and bonds, compared to how you would traditionally think they should play off of each other or trade against each other. And I think that very much has to do with the reality of reaccelerating inflation. And Powell came out last week and kind of soft capitulated. I wouldn't say I wouldn't really call it a pivot, and I wouldn't really call it a full capitulation, but the language was actually, like, compared to what a lot of people expected, pretty uber dovish given the rip we've seen in equities and everything, every risk asset, quote unquote risk asset on the planet compared to fixed income. And so I think we've seen, and Preston and I just had a short little back and forth. I think, like, for the most part, the story, never mind the Bitcoin, contagion and all that in 22, but the story from a legacy perspective was in 2021, 22, was, the biggest bear market in the bond market in history, in recorded financial history. So I think for the most part, we've seen the duration or the kind of the generational repricing occur. And now, even with the inflation shock, we're still at the same debt levels we were after the COVID bonanza. We're still at near record high debt levels. So you still need a decade or however long of financial repression and high inflation, or inflation above interest rates at the very least. So I think that's where the disconnect in the legacy markets can get really, really interesting, because I still think it's kind of an isolated echo chamber of Bitcoiners and some monetarists or hard money types, if you will, that are talking about this reality. So obviously that's super bullish for Bitcoin, and we can get into the Bitcoin native stuff, but I agree. This train has no brakes, and whether it's a Biden admin or Trump or red team, blue team, they are full gas, no brakes from a fiscal standpoint, and that kind of puts the central bank or the monetary side of things in a really tough spot. So wild times, but I'm as bullish on Bitcoin as I've ever been.
Love that, 100%. They're pinned from both sides here, and it's something that I think it was hard to see at first, and it flies in the face of, I think, conventional market wisdom of, like, rate cuts do this, rate hikes do that. Like, this is the common standard way to respond to these economic models and calculations. And I think, like, one of the reasons the last few years have been so confusing for so many market watchers and investors is just that, like, that standard operating procedure and that sense of normalcy has changed because of some of these factors. And I was a little late in joining, so I didn't catch the beginning. But just this buildup of debt and the way that, like, higher rates impact that debt, and it's I think it's just it's a system. It's a moment in time that really rewards, I think, fluidity in thinking and analysis, and the ability to go back to the drawing board and question truisms and assumptions and these kind of things that investors just took as gospel. I think, and I think that environment honestly continues. I think it's going to define this decade, not just this last post-COVID era. Like, I think investors that are able to stay on their toes and adapt to conditions that maybe we haven't really encountered in modern memory, at least not in the United States, like, start to play out in developed markets.
Absolutely, but then sometimes I wonder, like, as someone said, we are a bit of an echo chamber here. I mean, all of the Bitcoiners are super bullish for years already. I sometimes wonder, and yes, I mean, we did see a new all-time high, which is great, and I do think we are seeing a next bull cycle unfolding. But still, sometimes I think we're only at 70-ish K now, a bit below. If you look at only this year, you look at three super bullish signals for Bitcoin, which is the ETF, so amazing, like a huge amount of institutional capital is going to flow in here, and then we'll have the halving, so the natural selling pressure will go down, and then we will have, I mean, we do see the whole fiscal and debt situation and inflation situation, plus interest rates going down again. This is signaled very clearly. So already this year, why isn't it exploding like 10x?
I think one thing that's really interesting around the ETFs that no one's really mentioned is, I think, just based on my conversations with some of the large institutional banks. By the way, I'm Bitcoin Munger. I'm a cartoon character, but by trade, I run a long short equity fund and have been in the space since 2016. But if you were to talk to some of those larger institutions, you would find that actually most of that 13 billion that we've seen in flows has been predominantly high net worth individuals and just retail. We have not seen like the real money asset managers come into the space yet. A lot of them are still very much in the discussion, educational phase. So that's one reason why we haven't really seen that inflection point you're talking about. But I think also, the first 13 billion got us from, the 40Ks to 65, 70K. That next like 10, 20 billion is going to have a much greater effect, just especially as others have mentioned, right? People are not selling. So just to reach that equilibrium, price is going to have to just explode. So I think we haven't really even seen the bullish effects of the ETFs yet. I think this has just been the appetizer.
And to drill down into that a little bit, because I think you touch on an important point and something that gets frequently discussed, perhaps incorrectly on Twitter, is like sometimes people talk about like, oh, the OTC desks are running out of coins or they're buying all the coins, right? And that's not how it works, right? Like you can always bring, people can sell and you can, price can go up. But what you've described, I think, is the real impact. And it's even kind of more interesting that as that kind of whatever percentage of Bitcoin really trades and isn't locked in cold storage, as that gets scarcer on a relative basis, the like price impact of $1 billion of buying keeps going up, right? So like, you call it like the market cap multiplier or whatever, right? Like that is what kind of goes up as it gets scarcer. So I completely agree with you. As increasing liquidity and kind of further kind of rounds of purchasing come through the ETFs or other vehicles, you start to see, I just think, each successive dollar having more of an impact, assuming like a bunch of coins don't unlock from cold storage.
Right. And beyond that, right, we still haven't even seen the impact of the Asian ETFs, right? I mean, just where do you see what's going on in China from their real estate market, people running out to buy all the gold they can. You can potentially paint a very bullish picture for Hong Kong ETF flows that are, obviously the US ETFs were not priced in. Those I think aren't priced in either.
That's interesting. What's the situation there on like the Asian ETF front? Can you give some context there?
Well, last I heard, it's probably going to be more likely, I think, in the third quarter, but some people are still saying second quarter, so I guess we'll see. But yeah, when that comes through, you're going to see flows from the likes of China and Singapore, etc., towards the Hong Kong market. And you're already seeing that just from the spot market, right? I posted charts where you're seeing coins flowing to the east, right? So there's already preparation from a supply perspective, but just given if you look at the money supply in China, right, like we've put the brakes on printing money, they have just continued and they're up and to the right, and they have to because otherwise their economy collapses. And so, I mean, I think if you're a Chinese citizen, you're stuck in real estate. That's basically a Ponzi and a bubble. You're going to want to diversify outside, and Bitcoin is one of the only options to do that outside of gold.
Wow, yeah. And then so it was said before, like, so this will be another approval, and then basically all over the world, because in Europe we already have them, and then we have them now in the US and then in Asia. So let's say by the end of this year, the whole world, basically all the continents, will have access to ETFs. And then, as we also mentioned before, it takes time until these ETFs really are being distributed to all the potential buyers, right? Because many financial advisory firms or big banks, they have, once a new ETF is out, they have like 3 to 6, maybe sometimes 9 months until they did their whole due diligence, and as was mentioned before as well, the education phase of the potential clients. So what do you think, how long will it take for these ETFs to really trickle down to the clients, the potential buyers, until we see the whole potential of the Bitcoin ETF unfold? And therefore, how long will this bull cycle that we argue has just started, how long will this last?
I want to add a little context there, and someone else, if you want to jump in and take that, but just so I talk with some of these firms kind of on a relative basis. I've talked with, people working at Morgan Stanley, involved in like the state of this question. And I think some helpful context is just to understand what is currently happening. So currently, and this varies between firms, but I think the state at Morgan Stanley is similar to UBS, similar to Raymond James. The ETFs have basically been in non-solicitation mode. And what this means is that in some cases, if a client asks about it, they may be allowed to purchase it. That's only in certain accounts. So in a discretionary account, they could buy it. In an advisory account, which is a lot of the money, they cannot buy it, even if they do ask. And so when this flips, and it will flip, and it is most of the money, and B, I don't know if will solicit about it, but they become potentially able to. So right now, if an advisor at Morgan Stanley, and there are plenty of them who think Bitcoin is good, they cannot actually recommend that you buy the ETF, nor can they sell you the ETF in the account they manage. Somebody has a self-directed, they can do it. But anyway, so I think just some helpful context on where we are currently.
I know when we were in Madeira, Saylor had kind of suggested that he thinks you're about a year out until you start getting a lot of financialization being stood up on top of the ETFs with respect to derivatives and whatnot. So, and I think he said that pretty, not like it was an absolute, but that it's probably going to take about that amount of time for them to start building and those types of things on top of the ETF vehicles. So. And I think once you do that, I think you're tapping into enormous amounts of capital. The way that he was describing it is basically an API for additional fiat money to flow into the Bitcoin network. And I think it's an interesting talking point, but I think that the really important thing is more of like what you're doing at Relay and all these other exchanges that allow people to buy spot and take self custody. Because although it's fun to talk about it from a broader overall market perspective and what it might usher in as far as what we might see in prices, I think the more important thing that people listening to this really need to be well aware of is you can get easily sucked into an ETF, and that doesn't mean that the 6102 type attack, whether it's in the States or you name it, country around the world, it's not going to become de-risked in any type of way. So if people aren't intimately familiar with what I'm referring to there, and how important it is to deeply understand that. I think that they need to do their homework and really kind of understand the difference between spot buying and self custody versus the ETFs. But it's very fun to cover from a media standpoint. I will say that.
Yeah, for sure. But I think, or maybe a question to the rest. Do you guys think this is happening, like the trend from adoption, but adoption mainly into paper wrappers like the ETF or custody solution, or then also like self custody solution, and the trend from one to the other? So do you guys think that this trend is also happening with all this adoption in the bull cycle? I mean, everyone knows that the price action is always also attracting a lot of new entrants to the space. And are these joining the right journey of also learning about Bitcoin enough so they understand the benefits of really self-custody? Or do you think the more people that are coming now, the not so early adopters anymore, will basically overlook that advantage and basically just use custodial exchangers or even ETF on the long run? Because I think this is a very good kind of entrance for a lot of institutions and high net worth individuals. But what we also see at Relai, for example, is that many of these people that had a very easy entrance then really also learn more about it. And as they learn more about it, they go down the rabbit hole. And in the end, they want at least parts of their Bitcoin holdings in self-custody. And that's, I think, a very good point that you're mentioning, Preston. So I'm wondering what the others are thinking, like what comes with this. What comes with this bull market also a good kind of journey into the right direction on the Bitcoin principles for these new entrants that are now being attracted?
So we've seen the same thing, right? So I run the private wealth team for Swan. We work with like high net worth investors, doing a concierge service, white glove, etc. And I remember when the ETFs launched, I was kind of watching. I was watching the business, and I was watching how many people wanted to talk to us, like how many people, if there was going to be a big change, right? If people would be like, oh, okay, I'm just gonna buy the ETF, right? It's easier, etc. And I was watching closely in the following week. Seeing was that, I mean, just the number of people wanting to get actual Bitcoin only increased dramatically. Now, that may be because like the top of funnel, right? So like the total number of people that are now interested in Bitcoin just did a 10x or something, right? And maybe 80% of those people went to the ETF, but the remaining 20% is still a 2x larger or whatever it is than what was there before. Is economically rational, even if you discount like confiscation risks, like government risks. Like, I don't think you even need to lean into that. There's an economic case to own spot Bitcoin. You're going to pay fees once instead of every year, and you have a call option embedded in it, which means the total sum financial activity of novel financial applications that gets developed on Bitcoin, you can participate. ETFs make total number of people go up, and even if the percentage that's participating in actual Bitcoin remains constant, it's a huge expansion at that level.
Got it. Thank you. Sonny, I think you wanted to mention anything as well?
Yeah, can you hear me? I think my connection is not that great.
Yes,
I lost connection.
well.
All right. So, yeah, what I see is that we are coming from a time now where there were just like tech guys and nerds in Bitcoin, and now we're kind of on a tipping point, and we're going from the innovator phase to the early mainstream phase. But I personally don't see a world where everyone is doing self-custody, although it would be the best, and this is one of the great benefits of Bitcoin, that you can be your own bank. I mean, we're not just saying that, right? That's really true with Bitcoin. But people that I talk to, they don't really care about that all too much, or at least not that many people. The people who are coming in right now and who are interested in Bitcoin right now, they are interested because the price went up. So they're not really here for, like free money or money for freedom or money from the people for the people. They are here to make gains in US dollar terms. And of course, from all these people coming in right now to the top of this bull cycle, there will be maybe 10, 20, hopefully 30% who really learn about the fundamentals and at the end of the day do custody themselves. But I think that with all these solutions, with all these wrapped Bitcoin products and everything, we're moving more and more into a direction where we who understand Bitcoin and do self-custody, that we will be the small part, and most of the people, they will just use some of these products because they're just very convenient. I mean, I know a lot of people who are probably not able to set up a hardware wallet by themselves. I know this is kind of sad, but that's how it is. If I think about grandma and granddad, I don't see that they do self custody. So I think we're getting to a point where the majority will just own wrapped Bitcoin. That's how I see it. Or yeah.
Yeah, I definitely echo that sentiment, even in the financial world, right? Like if you're a fund, the reason why you're owning Bitcoin is because, the number go up, technology, that's all you're really interested in. But again, when you look at gold as a corollary, that ETF enabled a lot of people who couldn't custody gold themselves to do so, and led to the price, rising by 5x. So from that perspective, spot holders gain as well from from that element. And it just gives access to people who don't have the technical know-how to custody their coins in a safe manner. But if you're a fund, you're not holding a hardware wallet or anything like that, right? You just want to buy iShares and call it a day. I think it just makes it that so much easier because it's already embedded into our systems and so on. So it doesn't make really much sense from that potential risk of confiscation, right? I mean, people have been saying that for gold has yet to happen. So may happen down the road, right? But I don't think many funds are really thinking of those kind of risks.
The thing is, I mean, it is probably way harder to steal tons of gold than to steal some private keys from a custodian. And maybe at some point in time, let's say 100,000 Bitcoin gets stolen when the price is already at, let's say, 500,000 a million. Maybe then even those funds start to realize, hey, we need to hold our private keys. But so far, I mean, I don't really know about many incidents that a lot of Bitcoins were actually stolen, although it has to be easier than to steal tons of gold, right?
The challenge you're going to run into is the stroke of the pen. Once you get far enough down the timeline, let's say we warp ourselves 6 years into the future or whatever, and maybe treasuries or advanced economies that have fixed income markets that are melting down and the auctions are horrific. The government's going to get into a situation where they're going to realize really fast that they can't afford anything and that there's real money that's being used around the world and they have to have access to it. And what you'll find is a lot of these entities, they just follow the laws. They have people working inside of them that are going to continue to follow the laws because they don't want to go to jail. And my concern is that some of these governments are going to use the pen and the legal system in order to force these worker bees at these organizations to hand over the keys to many of these coins, whether it be the whole treasury, whether it be a portion of a treasury, but they're going to the big ones. And I think it's the only way that they can remain solvent or to bridge their total lack of monetary energy to fund the behemoth cancerous tissue that they've sowed throughout their entire government bureaucracy. And the challenge that people are going to have is once they come to this realization, it's going to happen very quickly. And if you think you're going to be able to move out of these paper type vehicles and into some type of physical thing quickly and without massive slippage, I think you're totally duping yourself, and you can't see the future of the incentive structure of where this is all going. But, you know, people might say that I'm a pessimist in that type of point of view. I just think that I'm just dealing with the reality and the incentives that are driving it all there, just very realistically. I see it to actually be somewhat of a higher probability than many would assign to it. And if you're not discounting ownership in such a vehicle like that, I think you're just grossly bad at financial management and risk management and security management and all the above.
100%, 100% agree. This is something I think, and that's what we are seeing with the bigger customers, is that at one point they will at least parts of it, because they understood it, right? They understood the benefits, and then at least parts of their holdings they want to have in Bitcoin, just as a hedge against the breaking fiat financial system, because all their other assets are based on fiat, and they really like the thought that they have at least a small part of their portfolio out of the fiat system. And I think the more, as you, Preston, described, the more the fiat system is breaking, the more they will want to have Bitcoin in self-custody, because that's the whole point of Bitcoin, that you're independent from the fiat system.
The problem, the fundamental flaw that I think people are making is what they've experienced in their life and what they've experienced in the last 5 years. It still feels linear, and what's to come is going to start feeling very exponential. And once it starts going in that direction, and I have no idea if it's this cycle, next cycle, the cycle after that, but when it does come and it does start to move in an exponential kind of way, if you think you can transition out of something that's paper into something that's physical, and you're going to do that like in a day, or you're going to do that in whatever amount of time, like you just need to pull up some charts from the 1920s in Germany to have an appreciation for how fast this is going to move against you.
I would be interested, or it's more a question from the audience already, for all of our speakers. What kind of evaluation framework you guys use to gauge how big Bitcoin will grow, and what are sort of the metrics you guys look at to come up to your conclusions?
I think it's really important to start from like a first principle that like all of these models make no sense. You can guess, you can say that it's reasonable. I think the thing that gets the closest to having some sort of utility is like, well, if Bitcoin did capture 1% of global investments, what would that be? Okay. Is that reasonable? Like, how do you determine if that's reasonable, right? Like, there's layers of error-prone assumptions in that. Like, if you have to make 10 assumptions to get to something, and every one of those 10 assumptions has a 10% margin of error, meaning 90% chance of being correct, which your assumptions do not, you know, at the end of that, you're at almost a 100% margin of error, right? Like, it's fraughtfully, like it's fraught with error. You can kind of draw a line in the sand and just be like, hey, on a gut level, it is that Bitcoin could capture 2% of global assets, 5% of global assets. And like, here's a rough line in the sand of what that would be worth. But, you know, you see so many models get passed around. You see so many, you know, like you're not going to predict the future of human psychology with math. I'm sorry. Like you're modeling human minds. Like price is the content of human subjective minds. And like, you can't math that.
Well, I kind of have a counter argument for that. Well, it's not based on math, but if in previous cycles human psychology played out a certain way, it is very likely that in future cycles the psychology is playing out as well, right? I mean, greed and fear, they're not going to go away. That's how I see it. I'm not saying I can predict where the price is going, except for it's going up because, yeah, we have more fiat money. So in fiat terms, the price has to go up. But the cycles, I think, in the cycles, I mean, you see the same patterns. at the top of every bull market, every influencer is launching his own coin. All these scams are going to the moon. And there are the same signs. So that's because the psychology does not really change. And the other thing, what I like to do is I always like to compare the market capitalization of Bitcoin to the one of gold, because they're not the same, obviously, but gold and Bitcoin, they definitely share some attributes. So as long as we are not near the market capitalization of gold, well, I can always orient to that, right? So, I mean, we can definitely hit the market cap of gold because there's so many arguments why Bitcoin is better than gold. And yeah, but after that, I have no idea. That's my take on this.
No, 100%. And just to like drill down a little deeper, when I hear the word like model, like predict a price with a model, I think A, you have to have a price, and B, generally, not always, you have to have a date, right? Like otherwise, I mean, you could just have a price. You could say, and those are the ones I have less of a problem with. Like I see a world where Bitcoin's worth equivalent to gold. Yeah, fine. Like me too. I see that too. The moment like you get into a price and a date, or even like you said, it's one thing to say that it seems likely to me that we're going to repeat the same cycle or whatever. How do you know? And not even like I'm asking like how do you like, do you think that's true or false? But literally, how would you determine that? What would you measure? Like what is the input that you're going to put in to either that will happen or will not happen? Will the cycle repeat? And if so, how do we determine that? I think it's literally just a gut feeling. There's no real way to, I think, actually quantify if it will or will not happen.
No, absolutely not. I mean, at the end of the day, it's just a game of probability. I mean, we all here agree the probability that Bitcoin is at zero tomorrow is almost zero, close to zero. That it's $1 million tomorrow, it's also almost zero. But in that band, in between, the more that you get to the current price, the higher the probability that the price of tomorrow is that price, right? And also we have past data. Of course, we cannot say the same is going to happen. But so far, the same happened every single cycle. So I think there is a higher probability, or there is a high probability that the next cycle will play out almost the same. But here is something that I have to ask Dylan, but I think he left because that is also very interesting. Where do the 4-year cycles actually come from? Is it the Bitcoin halving or is it the money printing? And Dylan made a great chart on TradingView. So yeah, that's a question I have, and I don't have an answer for it, or I have multiple answers for it. But where do the 4-year cycles actually come from?
So if you go back and you read some of the early writings of Satoshi, Phil Champagne has a great book called The Book of Satoshi, and it kind of categorizes and puts all of Satoshi's writings into various buckets that help you kind of digest it. One of the things that Satoshi talked about early on is that the market's going to be driven, most of the price is going to be driven similar to commodities markets like gold or the price to basically extract it is going to really dominate and drive a lot of the price, which people would say, oh, that sounds like the labor theory of value, which has many flaws to it, which it does. But I think it's a decent way to think about it very early on, and I think that the halving cycles really kind of drove a lot of this early on because of the scarcity that was drying up. The further you get into the utility of it and more participants that come on, the halving is probably going to play less of a role in driving a lot of that price, and a lot of it's just going to come from the sheer demand relative to the legacy system that they're exposed to and that they have to deal with respect to inflationary pressures, kind of making it not desirable to participate in the legacy units that fiat units that are being forced down their throats. So I think you're going to have, you might even argue that we're kind of going through that transition right now, where maybe the halving isn't going to have nearly the impact that it has, but the sheer amount of people that are coming that are seeking salvation for something that's going to provide a much better store of value that can't be manipulated by governments. And it's starting to be accepted and used, especially from a store of value standpoint, not necessarily a payment standpoint, but will be used as a payment, a form of payment in the future. And I think that you're going to have less and less of the 4-year cycle really kind of driving that.
Yeah, go please.
Yeah, just from the perspective of potentially things being different this time, right? It's always a tough thing to say, but just having been here for a few cycles now, I think one thing that we've seen in every cycle is targets that Bitcoin never reaches, right? Towards the end of every cycle, you have my little one making noise. Through, you have you have you have sorry guys, you have everyone making 100,000, the parabolic travs, etc., making quite high calls that we never really got to, right? I think this cycle could be very different, where people underestimate how high we really would go, right? I think this could be that super cycle, the super cycle for Bitcoin, right? As we saw with gold, with the ETF, right? It was just a linear exponential chart where it just continued to go up for years, and we can see that happen again with Bitcoin.
Right, and then the question is basically, are we getting into more of a continuous uptrend? And the other question, and also what Preston said, is about people basically going away from using these undesirable fiat units to another unit, which is then Bitcoin, and it is just a unit. Like, how do you measure the value of Bitcoin once the dollar and other fiat currencies are not usable for this anymore? This is what Jeff Booth is talking about. Like, you cannot measure something that is hard, like sound money, like Bitcoin, with a measure that is that is dynamic, right? And that just goes down in value. Like, how do you want to measure this? And that's also why probably these models are flawed, because they're always denominated in dollars, right? So where could this all go in the end? How could it play out?
Well, I would not say that they are flawed, because, I mean, of course, I live in Switzerland. I don't pay my bills in dollars, but I pay them in Swiss francs, and I'm pretty sure most of the American citizens, they pay their bills in dollars. So that's the scale right now. We have to measure things in dollars. I heard a very interesting take about this from Arthur Hayes. I think you guys are familiar with his work, ex-CEO of BitMEX. And he is actually measuring his purchasing power in how many barrels of oil his portfolio can buy. And that's a very interesting take, because, I mean, oil, here we say, I'm not sure if you say that in English, but in German we say like oil is the engine of our economy. And it's true if you think about it. Nothing works without oil. So you could basically measure Bitcoin in another commodity like oil, or, well, energy in general, or something like that. But I mean, we're so far away from that point where we measure things in Bitcoin. Maybe I'm alone with this opinion, but maybe most of us will not even witness that anymore, because that is decades away, in my personal opinion.
Got it. Makes sense. So we have another 15 minutes, and we have a lot of viewers here, and already got quite some comments. Joel, maybe you want to go ahead and read some of the questions from the audience?
Yeah, unmuting is apparently an art of itself. Sorry. We had pretty early a question for Preston. How would you advise millennials and Gen Zs with large Bitcoin positions and sound or stable jobs from a standpoint of appropriate asset location? Does it make sense to also hold other assets, or what would be your recommendation there?
So millennials with large Bitcoin positions, that's the question?
Yes, and a stable income job.
Okay. So congratulations. Because I don't think there's a lot of millennials probably in that boat, but I think that I treat Bitcoin the same way that I would treat anybody that would have if they were storing their money in dollars or they were storing their money in euros and they had a large net worth. Even though Bitcoin has a ton of volatility relative to those fiat currencies, I just look at it as being exactly the same as far as the risk in holding it despite the volatility. And I don't know if I'm framing that correctly, but I just look at Bitcoin as being just yet another store of money. But the difference is it's not being debased at a breakneck pace of, call it, 10% annualized. I think they can sleep well at night. I don't think that they really need to diversify into too many other things. I obviously have a very biased opinion about this, but I don't think that they need to really diversify themselves into equities or many other things, because I think in the face of all the severe premiums that you find in equities, call it 25, 35 multiples, as we move into this new world where Bitcoin's going to really be the new unit of account, all of that's going to have to get repriced, drastically repriced to much lower multiples because of the risk premium of just holding and custodying Bitcoin, especially with this much more upside for it to mature. So yeah, I would tell them just to continue to squat on their Bitcoin, make sure they're self-custodying it, make sure that they have very good process and procedures for custodying it, to never stop trying to think of better ways to custody it, but being smart about the way that they're, maybe making transitions to better forms of custody. Um, but yeah, I mean, when I look at fixed income, it's a total train wreck. When I look at equities, for the most part, especially if you're using Bitcoin to measure it, I think they're a train wreck. Better than fixed income for sure, but there's really nowhere else for them to go, in my humble opinion. But again, I'm very biased.
I think we're all out of this space. Tony, you've been promoted to speaker, I see. Go ahead and shoot your question.
Yeah, thanks for having me. Can you hear me okay?
Yes, all good.
Yeah, thanks. Well, I think I'm a little bit more aligned with Preston. I mean, the last few minutes I've been listening to everything that you've said, and you literally took the words right out of my mouth. So, I'm a little bit more on the extreme side as well when it comes to Bitcoin and how we approach it and the education that we push out. At the Bitcoin Way, obviously, we're very heavy promoters of Bitcoin self-custody solutions. We do not believe in anything else as a valid option when it comes to Bitcoin. And the way we got to this conclusion is really by understanding money at its fundamental core. If you realize, that the world we live in is, at least the fiat system that we live in, is a system that was fundamentally, designed as a thieving system, well then, understanding Bitcoin as the only option is not a very difficult one. And once you get that, I mean, nothing else makes sense. We are like, if you stay on the fiat system, there's so many things wrong with it that you are being stolen from in like 100 million directions, on a daily basis. That's for one. You are indirectly being complicit in, crimes against humanity worldwide. That's two. And the list goes on and on and on and on. And what is there really that you own that cannot be taken away from you by force? We've never really had anything like Bitcoin before Bitcoin. And so once that really clicks, you cannot not want to have it. Like I don't believe in bull cycles. I don't believe in TA. I don't believe in any of that rubbish. Once you understand that Bitcoin is the only asset, only store of value that you can preserve your time and energy in a way that no one on this universe can take away from you, then the only risk with Bitcoin is not having it. And there's only upside, because sooner or later, 8 billion people are going to realize this when their turn comes to experience something that is going to decimate their lives. I was fast forwarded into this situation. In hindsight, it was maybe the best thing that ever happened to me, but in the moment, it was the worst. I witnessed firsthand the complete obliteration of life savings across Lebanon. So I know exactly how that feels. And I know that whatever happened there is not unique to that part of the world. The mechanics of fiat currency are the same worldwide. So it's just a question of when, not if. And if you're not prepared for this, well, then you're going to suffer the same consequences that many arrogant people have assumed, that somehow they're immune to this because of whatever reasons were running through their head, and you're going to have to learn the painful way. So there's a lot of education still missing in the world. I don't believe in any of the ETFs. I don't believe in any third-party custodians. There's no shortcuts to owning your wealth and protecting your generational wealth. It's not hard. It's just new. But there are plenty of resources. There are plenty of people that are willing to spend as much time as it takes to assist you from going from point of knowing nothing to knowing this, like spelling your own name. And I think it's in everybody's best interest to at least consider going down that path. And if you don't feel comfortable yourself, I am sure everybody has someone they trust enough in their immediate circle that they can use as an interim step to get to that point.
Okay, thanks for the comment. I also have one more question from the audience in the reply to the whole panel. What's your guys' thoughts on Bitcoin adoption and the effects on energy consumption overall, not just tied to the Bitcoin mining industry, but if there will be a correlation between the two? Yeah, what do you guys think?
One of the reasons you have everybody talking about ESG and energy policies and why we need to go green and all this other garbage, I think most people listening to this are already dialed in. And the reason why is because if you just keep on keystroking a bunch of made up units into a system, everybody just goes out and they consume and they consume as much energy as they possibly can. And if you're looking at that and you don't understand like what the inherent issue is, you'd look at that and say, we're just consuming too much energy, and next year it's going to be even more, and this is getting out of control, and we've got to stop this somehow. So I'm going to go pass like 20 different policies to prevent the use of so much energy. And when you step out of that legacy existing system and you look at the new system, which is you can't keystroke more units into the system so that there's overconsumption, you naturally solve the situation where anybody and their kid sister can go out and just consume as much energy at will, as much as they want, whenever they want, wherever they want. And now all of a sudden, if you didn't create real economic value for society, congratulations, you can't go out and just consume a bunch of energy well beyond the means that you created for the value accretion that you created for society. So it's going to take time for people to understand what's happening, what's playing out. But I think rest assured, 10 years, 15 years from now, it's going to become quite obvious that a lot of these problems that people think they just need to go pass some policies to solve, all of a sudden you don't need to pass some policies because Bitcoin's naturally solving all of these overconsumption of energy issues that plague the entire planet.
Wow, that's an interesting viewpoint. I mean, that's very forward-looking, and it's true. If you think about, yes, Bitcoin might consume a bit more energy, but it will also decrease so many other energy wasting industries, and starting with the fiat financial system. If you think about the actual printing of banknotes, if you think about all these buildings and server farms of of banks, if you think about gold mining and all these kind of things, just how much energy and unsustainable energy, not unlike the Bitcoin network, which is mostly based on sustainable energy, but so much unsustainable energy that only the fiat financial system is consuming. If this is not yet not anymore needed, at least not to the extent that it is now, then the net saving of energy will be huge once we get closer to hyper Bitcoinization, or just the more we will adopt, the Bitcoin adoption will move forward. And there are many other ways, just because, as Preston said, all these wasting of energy will have an end. That is now like really crazy because money is abundant.
Julian,
I
just
think
to kind of
it's
like put this, if I was going to like double down on this, imagine you have your own currency at your house and your kids are using this money and it's a fixed supply. So like if they do a chore for you, then great. Then it's like this system inside your house where everybody's using a fixed amount of units that you can all agree upon and you're scratching each other's backs, just kind of making everything happen. Then you turn it into a system where maybe the father is just like printing off like 20 extra units every day and he's handing it out, paying for things. And he just can't understand why the kids are consuming so much electricity and they're just eating everything in the house. Like just localize it and just like turn it into a much smaller thing. And everybody just quickly realizes, oh, well, the fact that he's like debasing the amount of units that they're using to exchange in that small setting is the reason why everybody's over consuming. And so now you just play it out on a global scale and it's just like so freaking obvious that like even a dope can understand like how simple it all is. And I guess I'm pretty frustrated that it's taking the world so long to like see just how obvious this is, but I guess it's more complicated and whatever. But
I think what's like, and I think it's worth drilling down there is it's not like it's not consumption of energy per se, right? It's and you guys use the term waste, but I think it's like important to define waste in terms of what. And it's waste in terms of capital accumulation, right? Like the really damning thing, and it's not just energy, it's resources too, right? Like this is just a big kind of continuum. You have energy, labor, you have all of these inputs, right? And I really don't think one of them is more important than the other. I think when we're teasing this apart. And what is the real fucking problem is when, due to the proliferation of easy money from thin air and the kind of unequal distribution and access to that money, like the incentives get out of whack. And so resources are consumed in a way and expended in a way which consumed and expended in the pursuit of non-productive uses, right? Nobody cares, or at least, well, that's not true. Nobody should care if you consume energy to produce a very net positive capital outcome and you advance human civilization, you advance human capacity, and you make new things come into this world. Like that's a good use of energy. There are few better uses of energy or resources, of matching up resources and to entrepreneurs who have good ideas for those resources. And some of those succeed and some of those fail, and they're purchased using currency. But when you distort that whole process, like I just think it's worth drilling down that like it's because it's being consumed and wasted unproductively. And it slows down, it literally slows down the speed that we progress slower because we have scarce resources and we're using them for bullshit because of an accounting fiction.
Yeah, I hope we all got your whole point, but I think I got it. So thank you so much, guys. We're at the end of this. Really appreciative of all of your time. That's why I let you guys go now. But I really learned a lot. I hope the audience have too, and I really appreciate you guys sharing your invaluable time with us, both the experts panel. Thanks for coming, and also thanks for listening, guys. Almost I think more than 1,000 people tuned in. Really appreciate it. We will also upload this on YouTube so everyone can get the recording. So yeah, thank you very much and see you next time, guys. Have a good evening.
Thank you. Bye, guys.
See you.
Have a good
Thank
evening,
you,
guys.
Thank you.
Bye.